The video most of you have been waiting for: how to trade after the election. Are there any stocks that are more of an asymmetrical bet after the election? Are there any stocks that would favor one candidate over the other? Are there any trades that can be made asymmetrically after the election is over? I went down a rabbit hole for this one, looking up all of the information based on elections going back to 2000. Now, it's important to note before we start that in the long run, it doesn't really matter who's president, right? There is a two-party system for a reason. Republicans and Democrats are both part of the corporatocracy. They are both friendly to corporations. Corporations are the biggest donors to both parties. So in the long run, it doesn't matter unless your name is Herbert Hoover, the only president where the stock market had actual negative gains during his presidency. Otherwise, yes, there are data to show that bear markets do happen more under Republican presidents than Democratic presidents. But in terms of in the long run, this is one long chart up, one long trend up, regardless of who is president. So let us get down to the nitty gritty and see if we can comb through the details and find certain trades that might be better than others after the election. Let's get right into it. All right, the first thing I want to do is take stock of where we are at here. Now, the S&P 500 made all-time highs in October. This is actually not that uncommon, and I'll show you why. But the S&P 500 made highs in October. The Fed did its first rate cut September 18th. The NASDAQ made all-time highs very recently in July, and then tried to reach back to those all-time highs in October, but failed. This is actually very similar as well to something that we've seen very recently. It's important to take stock of where we're at now because we need to compare it to previous presidential elections. So as of right now, the S&P is in a near 3% pullback. Now, if we take a look at 2020, the S&P was in an 8% pullback. It hit all-time highs in September, near double top in October, same thing that the NASDAQ is seeing right now. However, the Friday before the election was the last low for the rest of the year. That November ended up 9%, December up 3%, the following year was up 25%. And for those of you that might be thinking that election uncertainty leads to market turmoil, that is not the case. It might lead to a higher VIX, but the election was not officially called until Saturday, November 7th, even though voting happened on November 3rd. Now, this was during the pandemic and there was all that, hoopla with the recounts and whatnot. So during that time, the market still rallied, right? Now let's take a look at 2016. The S&P was in a 4% pullback. So now we see that as of the last 3 elections, it is not uncommon for the S&P 500 to be in a pullback. Hit all-time highs in September, near double top in October, very similar. The Friday before the election was the last low close for the rest of the year. November ended up plus 3%, December ended up plus 1.5%, and the following year ended up plus 17% for the S&P 500. The election was called that night. 2012, S&P was in a bull market again. Hit 5-year highs in September, almost reached all-time highs. Remember, this was coming off of the heels of the 2008 financial crisis. Near double top in October for the 4th time in a row now. Didn't make a low close, however, until November 15th. November ended up plus 0.47. December ended up plus 0.66. The following year ended up plus 25%. And the election was called that night. It was not a delay. Now, here's where things get more interesting. November 2008, we were already in a bear market. We were already in a recession. The S&P was already down 34%. Did not make a low until March 9th, 2009. It dropped another 28% after the election. November was minus 6.36%. December was pretty flat, plus 0.5. However, in 2009, we were up 21%. The election was called the night of. November 2nd, 2004, and we're going to go all the way back to 2000, so one more after this. We were in a bull market. Friday before the election was the last low close for the rest of the year. Election was called that night. November plus 3%, December plus 2.5%. But 2005 was really flat, plus 1% for the entire year. November 2000. Now, this is the one that I think is the most similar to today, and I'll tell you why. In September, we made near highs, 5% pullback by election day. Right now, we are in a 3% pullback. We were not yet in a bear market. The bear market and the recession started the following year in 2001. Didn't hit a low until October 9th, 2002, almost 2 years after the election. The election was not called, by the way, until December 12th, and it was decided by the Supreme Court. Now, even though we were near highs, the November results were negative 6.74%, December negative 0.84%, and 2001 we officially hit a recession and a bear market, and the S&P returned negative 13%. The reason that I say that we are very close to what happened in 2000 is because the stock market valuations are very similar to what we saw in 2000. If you take a look here, you could see that the stock market valuations, if we're looking at the forward PE ratio based on where prices are now for the S&P 500, are very near where we were in the pandemic, which was also very near the dot-com era. But more importantly, we were in an almost exact same scenario with regards to rates. So if we're looking back at the historical data that I compiled, right, all of this data here, 2008 and 2000, those were the two times that we were very near identical situations with regards to rates and with regards to Fed policy. So in the long and short of it is, it doesn't really matter who the president is in the midterm, in the long term. What matters is where we are in the rate cutting cycle. Now, I still will give you some stocks and trades that I feel like will do better under Trump and some that will do better under Kamala. But the most important thing to take away here is not really the election. The most important thing to take away is, at what point are we going to be instituting dramatic changes to our monetary policy so close to the election? That's what matters. It's not the election itself. As you can see, as I told you before, even when we've had uncertainty in the election, the market does not get that spooked. It's when we have uncertainty regarding the economy, and any time that we are touching rates to this extent, that is what tends to give us negative movement in the stock market. That is why I say that right now is very similar to the year 2000. Not so much 2008, even though 2008 we were also in a rate cutting cycle very similar to this one. As a matter of fact, the first rate cut ironically happened on the same exact date. But it is because if you take in conjunction the stock market valuations and the fact that we are in an AI bubble, right, versus a dot-com bubble, plus the story as it relates to rates, right? You combine those two things, and then you also include the presidential election, and you can see why, in my opinion, we are very close to the situation that we saw in 2000. Now, please, 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 please hear me out. I'm not saying that we will see a depression-like bust in the stock market the same way that we saw in 2000. But I am saying the landscape is very similar as it relates to rates, the presidential election, and stock market valuations. And I do think that we will be getting a recession coming up in the year 2025. If we take a look at the 10-year and 3-month yield, this is something that if you've been following this channel, we've been monitoring like a hawk. We are almost uninverted here as the 10-year is surging past the short-term yields. So trade number one, let us talk about yields. Trade number one has to do with treasuries. Now, as you know, it was unsurprising to a lot of people, the fact that the 10-year yield and yields in general, long-term yields started climbing after the Fed rate cut. If you were tuned to this channel, you know that I expected us to rally a little bit, like a sell the news effect, after the Fed cut rates on September 18th. However, I'll be the first to admit that I did not expect it to be this violent. As a matter of fact, the bottom of the 10-year yield was when the Fed cut. The exact day that the Fed cut was the bottom of the 10-year yield. So the Fed cut rates, you would expect yields to go down. I did say that we would get a sell the news effect on bonds. Remember, bond prices and yields are inverse, so a bond sell-off means a rise in yields. But even I will tell you, I did not expect it to rise this violently. However, now doing a deep dive on the election data, you can see here that after the first rate cut in January 2021, we did rally past the point of where we were in January 2021, right? And then the Fed started cutting rates aggressively. We hit a recession. and yields started to tank, and they continue to tank, meaning that if you buy bonds or buy bond funds, they will rally, right? If we take a look at 2008, what happened here is something very similar, right? The Fed cut rates in September. The 10-year yield rallied into the election, and the election was the highest point that the 10-year got before then tanking, meaning bond prices are going to go up. So something very similar here, that after the Fed cut rates, we started rallying. We are now going into the election in a rally. And in my view, unless inflation comes roaring back, and the next inflation reading, I believe, is November 13th or 14th, if inflation comes roaring back, then yes, this whole thing will be a mess, right? But if we are going to be following the trend, this is going to rally into the election, and then we will likely see more rate cuts. In my view, the Fed will cut another 25 basis points in November and another 25 basis points in December, and we should start to see yields dissipate. Now, I do think that under a Trump presidency, right? I do think under a Trump presidency, the pressure on the Fed will be much heavier, right? Trump already doesn't like Jerome Powell. He said so as much. He tried to pressure him to cut rates in 2019, even before the pandemic. And he, as a matter of fact, was successful in doing so, even though Powell said, no, we did not cut rates because of pressure from the White House. Yes, they did. And remember, just a month or two ago, Trump said that if he is elected, he's going to fire Jerome Powell. Now, he's since walked back those statements and said that he's not going to fire Jerome Powell. But he did say that he believes that the president should have more power on Fed policy and should be able to influence Fed policy. Even if we see an initial spike in yields because there is a fear that under a Trump presidency, due to tax cuts and less tax revenues, that the Treasury will have to issue more treasuries in order to increase that revenue, we might see an initial spike in the yields. However, over the course of the mid to long term under a Trump presidency, we should start to see yields declining. And I do believe that he will put enormous pressure on Jerome Powell to continue rate cuts, and aggressive rate cuts at that. And with that said, whether it is the increase in yields that take us to a recession in 2025, or Trump putting pressure on Powell to decrease rates rapidly, or a combination of both, right? I do think that yields will eventually start to fall off in 2025, and that will then lead to an increase in bond funds such as TLT. So I do think that under either president, bonds will see a rally in 2025 and 2026, but I do think that they could be a little more violent under Trump. So I am starting to position in TLT once again, into bond funds once again. I don't think that this is the bottom per se. Like I said, I do think that a Trump presidency can cause an initial spike in yields, meaning another drop off in bond funds. But this to me is not so much a trade as much as it is a midterm investment. Number two, Bitcoin. Now, if Kamala ends up winning, I do think that we can see another drop off in Bitcoin to lower levels below this trend line. This right here is the yearly trend line. We have a traditional break and retest of Bitcoin. If Trump wins, I do think that we will retest that 74,000 level really quickly, and we could potentially hit 100K by 2025 easily if Trump is president, right? He already says he's an advocate for crypto. If Kamala wins, I do think that we could see a break back below this trend line, causing this to be a fake out. And I still think that Bitcoin will see a rally in the long term, even under Kamala. I will show you what happened under Obama and when Trump became president in 2016. But I do think that we will get one more round of sell-offs under a Kamala win, as sort of an impulse reaction before seeing a slower rally. If Trump wins, I think we see a much faster bounce in Bitcoin off of this trend line right here. Now, I want to show you something really interesting that a lot of people, haven't seen this analysis anywhere. But if we take a look at Bitcoin, and there are Bitcoin related stocks, so even if you're not a crypto trader, I will get into Bitcoin related stocks in a second. But if you take a look at what happened under an Obama presidency, right? Obama was elected in 2008 until 2016. It is not even really spoken about that Bitcoin went from just being, a few pennies all the way to a high under the first Obama presidency, a 65,000% increase to $33. Right? And then under Obama's second term in 2014, Bitcoin hit a high of almost not quite $1,300, $1,229, right? So like a 2,000,000% increase from the first Obama term, right? That is not too shabby in terms of a percentage increase. We went from a few pennies to 1,200 under an Obama presidency, right? Now, when Trump became president in 2016, he was not even as crypto friendly seemingly as he is now. But once Trump became president in 2016 and he was inaugurated in January 2017, Bitcoin was already at the high where it was during the Obama presidency at 1229. And in 2017, that is when Bitcoin went to that very famous $20,000 level under a Trump presidency. Right? And this was back when he wasn't even perceived as crypto friendly. So again, this is analysis I haven't seen anywhere. Just take that for what it is. I do think we will see a more violent rally in Bitcoin if Trump is elected. I do think we see another sweep of some sort of support level if Kamala is elected before a rally. But I do think Bitcoin rallies in both cases. Now, if Trump is elected, if you think Trump is going to get elected and you don't trade crypto, there are crypto Bitcoin miners, right? Such as Marathon, such as Riot. You also have MicroStrategy, right? MSTR, which is considered a Bitcoin related stock. These things will do very well if Trump is elected and Bitcoin rallies. Now, MSTR is a little expensive. What we have done in the trading floor, we started selling puts on Coinbase. So I have the 165 cash secure puts on Coinbase. I will be assigned Coinbase if we see another drop. But Riot is a very cheap stock, and I will likely be trading Riot in the after hours and pre-market, just the commons, just the shares, depending on who wins the presidency. Now, if you want access to all of my trades, my analysis, I go live every single morning at market open as well. Make sure to sign up. Use the link below. Also, we just opened up an investing only membership for those of you that don't day trade and are only interested in my long-term analysis and my long-term stock picks. There is also a cheaper investing only option. You will not get access to the live day trading. You will not get access to the day trades or the swing trades. It is just for long-term analysis only. So whatever it is that you do, there is an option for you. Would love to have you. All right, trade number 3 is Tesla. This is a pretty obvious one. Now, I do think that if Trump is elected president, I think Tesla will fly. We'll get to that $1 trillion valuation in the short to midterm, right? We will see Tesla at 300 and above if Trump is elected. Now, if Kamala is elected, I do think that there is a chance that we see a big drop in Tesla. And just like I told you with Bitcoin, very similar to what happened here in Tesla in July, where we did pop above, and then it seemed like a swing failure, and then we dropped back to support, right? That is what I think will happen to Tesla under a Kamala presidency. And it's important to note that we are talking about the very short term. Like I said, in the long term, either president will do well, in my opinion. The stock market will do well under either president. It's just in the short term, certain things will react differently depending on who is elected. The fourth thing that I'm looking at is Google. Now, Google is already in a pattern that I'm interested in for a long, and I actually do have a long here on Google. Now, I did buy the shares when we had that Tokyo scare, October 5th, that Japan scare. So we are up heavily on shares already. And yes, I did send that out in the investing alerts. However, I do think that in the short term, it is due for a pop. There are conflicting comments by Donald Trump on whether he's looking to make Google, he said, quote unquote, more fair. Now, does that mean that he's looking to take an active role in breaking up Google? He talked tough on Google in the year 2000 and didn't break that up. And Google ended up doing really well under his presidency. But in the short term, if Kamala wins, I think that we see a pretty big blast off in Google, not only because Trump, already was talking tough against Google, but I did some research. One of Google's lawyers that is representing Google in the antitrust case is a speechwriter for Kamala Harris. And the last trade I'll give you in terms of a sleeper pick, I do think that the smaller American oil companies might do well under Trump. Remember, his whole mantra is drill, baby, drill. And I do think that companies such as Devon Energy, Occidental Petroleum, these things that have been beaten up, especially Occidental, where Buffett owns, 40% of this company, right, is still hovering in that $50 range. Now, we obviously have the bigwigs such as ExxonMobil, Chevron. Those are all in the XLE ETF, which is the energy ETF of the S&P 500, right? This is also something that you can invest in on pullbacks, especially under a Trump presidency. However, I do think that there is more of an asymmetrical play under the smaller energy companies such as Devon Energy and Occidental Petroleum that have really been holding their value, but they haven't really done much, right? These things, I don't think the price of oil is going to necessarily rally under Trump to astronomical levels, because I do think that he is one president who can actually pressure Saudi Arabia into producing more oil, or he can convince U.S. oil companies that, they should be drilling more by removing regulations and obstacles. So with more oil on the market, I don't think that the price of oil is going to be affected as much, barring any sort of geopolitical mess, which I think he's more keen on ending, right? I do think that we will get a much faster conclusion to the conflict between Ukraine and Russia, the conflict in the Middle East. And I don't think that there will be an escalation with Iran, or at least that's not the interest. But I do think that the American oil companies might benefit from a Trump presidency, because even if the price of oil isn't increasing, their revenues and their bottom lines might be increasing under a Trump presidency because they'll be allowed to do more. So this is more of a sleeper pick, but especially at these prices, I would be willing to take a crack at the smaller oil companies that have more runway than something big like a Chevron or an Exxon. And lastly, in terms of the overall health of the market, it is still my belief that we will see a recession once the 10-year and 3-month uninvert, and once the 10-year actually starts paying more than all of the short-term yields. If you look right now, you could see that the 10-year is now paying more than the 7, the 5, the 3, the 2, the 1, but it is not paying more than the 6-month, 4-month, 3-month, 2-month, and 1-month. So I think that the 10-year has to be above all of these before we will likely see a recession, right? The long-term rates have to put pressure on the economy, and then that is when the Fed will be pressured into cutting. So I think that the 10-year continuously rising in the next 1 to 3 months is going to put immense pressure on the economy, and then the Fed will have to cut aggressively. So I still think we will get a recession. Now, whether it is a deep recession or a shallow recession, I have no idea. And I will tell you time and time again, I have no idea. But this was around the 2000 presidential election. This was around the 2008 presidential election. And we now have the 2024 presidential election. So this uninverting into a presidential election usually does not bode well for the economy or the stock market in the following year after the presidential election. Otherwise, presidential elections are bullish. It's just, unfortunately, we are in circumstances where that is not the case at the moment. However, if we are provided with a major discount like we were during the first Bush administration, like we were in between Bush and Obama, like we were in the last years of the Reagan presidency, if we are given that type of opportunity, then it is clear that regardless of who's president, you should be taking advantage of that for the long term. So If we will see a recession, if we will see a bear market in 2025, just be ready, because once it passes you by, you will see the most violent rallies coming out of that bear market, coming out of that recession. It will be over before you know it. And you will be like, why didn't I buy Nvidia when it was 80? Why didn't I buy Microsoft when it was 350, etc., etc. I do think the safest play is to wait until that 10-year and 3-month uninverts and then go into bonds. But I did give you some other plays to think about. Obviously, everyone has a different risk tolerance. If you want to follow me and my trades, make sure you sign up below, where you get access to all of my trades, day trades, swing trades, etc. If you are only interested in investing, then sign up for the investing only membership at $35 a month. I, for one, am super excited about this opportunity, especially if we do get a bear market and we get cheaper prices. In terms of investing, I don't really care who's president. I will be able to maneuver regardless of who is president. No presidency is going to stop me from making the soundest decisions that I can make based on my analysis. If you got anything out of this video, give it a thumbs up. Leave it in the comment section below. Let me know what you are trading, what you think is going to rally based on the candidate that you think is going to win. Do you think we get a recession in 2025 regardless of who's president? Curious to hear your thoughts. Anyway, subscribe to the channel. Stay safe out there, traders. Peace.